right, 8:33. We're gonna go ahead and get started because it's gonna be a good day. I'm excited. All right, everyone.
Yes.
Welcome to the Health Help with Dr. T. As you know, I'm Dr. T. Today we have my dear friend, but before I introduce him, I'm gonna give my disclaimer. Everything you hear on this live and on this page, general information only. Don't go and say, "Oh, Ephraim said I can write off my entire house, and now I'm mad at
Right.
my accountant." No. If
Right.
you have any specific questions, you can reach out to Ephraim himself. He's going to kind of share his information, reach out to your
Yeah.
accountant, and so forth. So we want to keep it general, but at the same time, we want to make sure we educate the people.
Yes.
So welcome, Ephraim. I would give a short introduction and then you give an introduction. Ephraim
Okay.
is a dear friend of mine. I don't even remember how many years we've been friends,
It's been a long
but
time.
a long time. But I
Yeah.
see Ephraim and I see money. Ephraim is Mr. Money to me. So I had to get him on this live. I had to get him to just kind of to come here and share information with us. So go ahead and give a
Yeah.
short introduction and we'll get started.
Yeah. Yeah. So how's everybody doing tonight? I'm Ephraim. I'm a CPA based out of Houston, Texas, originally from the Dallas Metroplex, but I'm a Houstonian now at this point. I've been here so long. Right. University of Houston graduate, married to a beautiful wife, Rita. She was also a CPA as well.
Yes.
We have twin boys, Elijah and Elion, and yeah, we own an accounting firm called EFS Group PLLC, where we help our clients manage their money so that they can scale businesses with confidence. And we've been in business now for about 16 years, since
Wow.
2009. Yeah, so in 2009, um, for those who don't know my story, I was in corporate America for a couple of years. I worked for a large accounting firm called PricewaterhouseCoopers, and then in 2009, I got laid off from my job. And that was around the time where the economy was real bad back then. People probably watching were probably in college or in junior high, maybe, right? But I was looking for my next job for like 6 months, couldn't find anything on the market,
Wow.
and then I decided to start a business, right? And at the time when I started, entrepreneurship wasn't what it is now. I mean, it was always in play, right? But it wasn't popular online like that,
Right.
right? Like Instagram wasn't even there. Facebook was there,
Right.
so a lot of friends thought I was crazy for doing it, right? And one of the things that I remembered was that in college I did people's taxes. That was one thing that
Mm.
I actually enjoyed, and actually my favorite class in college was individual taxation, right? Where
Wow.
I had a really great professor. He was a cool guy. I think he's still around too. His name was Professor Dr. Green, right? He's a CPA, a lawyer, a Kappa, like smooth black man, older black man,
Wow.
right? And he had his own business, but then he also was a professor at U of H.
Mm.
And the way he broke down taxes, it just clicked in my head. I was like, I could do something with this, like I could make some
Right.
money off this because I understand like how to do it even before using the software. Like he made it come
Mm.
to life for me, right? And so I started doing it for people on the side while I was working. And yeah, when that happened, when the whole job thing happened, I started my own business. I had a brick and mortar location in Rosenberg, Texas. I had it for a long time actually, but I started out there, opened my business, opened my doors. I was cocky, so I'm thinking I'm going to open my doors and everybody's just going to rush in and
Amen.
come. That didn't happen.
Yeah.
We probably had about 50 to 100 clients the first year, which is not bad, but
Wow. Yeah.
it's not enough to pay the bills, right? So I made
Right.
35,000 my first year, right? And then the second year, and then that's 35,000 for the whole year.
Wow.
Second year, once again, I'm like, okay, let's try again. Next year was like 55,000 for the whole year, right?
Wow.
And then the third year was where I was like, okay, I got to figure this thing out, right? Like, what's going on? Why am I not able to get people in the doors?
You
And
going?
I remember that H&R Block did something called the second review, right?
Mm.
And they would do it in March and April, like the last month of the tax season, right? They would run marketing saying, hey, if you didn't go to H&R Block, bring your taxes into our office. We'll review it for you for free, and if
Mm.
we don't find anything, you don't have to pay anything. And then if we do find something for you, you pay us a
Hey.
small fee, and then we do an amendment, and then you get that check in the mail, right?
Wow.
And so I saw that, and I was like, I could do the same thing, but keep it going throughout the year. They stopped at
Right.
April 15th. I'm going to keep it going throughout the year. And so I was doing it, but nobody was really biting on it. Then this one woman one day bid on it, and then she did it. And then when she did it and she saw how much money I got her back, I think it was like $2,000 or $3,000. She now
Wow.
sends a mass text message to all her people in her phone, like 50 people. And so all those
Wow.
people started contacting me, and then
Wow.
everything started going crazy, right? And then that's where I really built up, my tax clientele at that time. And so I
Okay.
was able to make the six figures in my third year, right? And
We'll
so,
come. Don't give us everything now. Hold
yeah,
on. Hold on.
okay,
Hold on.
okay, it's too
Let's
much.
build.
It's
So
too
I
much.
want to
Okay.
give. I want to give some information. So this today's live is not just geared towards business. It's geared towards everybody. I
Hmm.
think we're going to do another live in the near future on just businesses, because I think that is so almost like everyone has a side hustle or they're
Hmm.
having something now that I feel like that's a business, right? But
Right.
we're gonna be going back and forth. I don't really prep before my lives. We haven't spoken, right?
No, we haven't.
We've not asked. I don't send questions. I really just go with questions that come in the live and just
Right.
what I want to know and what I think people want to know. So we're gonna be going back and forth with
Okay.
business and not business. So let me
Okay.
ask a general question.
Hmm.
Someone that doesn't have a business, could they still qualify for tax write-offs?
Yeah, I mean they can. It's very limited, right? Like you have
Okay.
charitable contributions. If you buy a house, you can write off the mortgage interest, the property
Okay.
taxes, things like that. You can write off medical bills, but it has to be 7.5% or more of your
Mm,
like adjusted gross income, right?
okay.
So let's say you make $100,000 and that's your adjusted gross income, then that would be 7,500, right? The bills would have to be over that. So how many people, unless you like go to the doctor all the time, you probably won't reach that minimum, right? So
Well, there's some people that might. I'm thinking about even people that have fertility issues.
yes, for sure.
They're
Yeah,
definitely going to hit that cap, right? Because
yeah.
that's one of the reasons why. And obviously, I'm putting lives together because I'm going to our OBG, going back to our OBGYN lives. Is those that are having fertility issues that are going copays and IVF, IUIs, they're going
Hmm.
to cap that 7,500. So if they know in the back of their minds after they're speaking to their accountants and
Hmm.
see if it works, could they write up some of it? That is definitely something I think people would
Yeah,
love to hear about.
for sure. You definitely want to bring that to your accountant. You want to bring all of it, whether
Okay.
it's co-pays for the dentist, the doctor, like you said, IVF, anything related to medical, you want to bring it
Hmm.
all along with the home deductions and things like that, along with the charitable contributions, right? Bring it all, and then now your accountant can like go through everything and see what it's going to do for your tax bill. But yeah, yeah, you definitely those are the three main write-offs that
Okay.
you have. Um, and so, you are so, obviously if you have kids, then now you can write
Hmm.
off daycare expenses, right?
Really? Oh,
Yeah, you can write off
nice.
daycare expenses for
Okay.
sure. It caps at like $3,000 per child that you can write off, like up to
Okay.
that, right? Well, unless Trump changed, I think Trump changed some of that recently, right? But you have write-offs for that. If
Okay.
you are in college, you can write off your educational expenses potentially.
Okay.
Um, but then depending upon your income, a lot of these things kind of get phased out, right? Like
Right.
the more you make, the more the government kind of squeezes you as a W-2 employee, right? You can write off student loan interest up to a certain point. So there's things
Okay.
that you could potentially write off, but if you're someone making six figures plus, some of these things might help you and some of them might not even, you'll be giving it to your accountant and wondering why it's not working,
Right.
and then they'll have to explain to you what's going on.
But I
Hmm.
think any bits help, right? And even this
Hmm.
knowledge, like the daycare, knowing that I can even ask my accountant and be like, hey, do I qualify for this, goes a long way. I may
Hmm.
not qualify, but I know somebody else that may qualify or so forth, or you may
Hmm.
qualify depending on, your situation that year and things like that. Someone said you can write off your parents' allowance too. Um, can you do that? Because can I write off my
So my
parents' allowances?
parents' allowances. If you're claiming them as a dependent, there's some things that you potentially could do around that.
Okay.
Potentially, yeah. So you want to make sure you have your documentation together,
Okay.
right? And when we say allowances, they have to be a dependent, right? So they has to, obviously you're taking care
Hmm.
of them. If you're,
Right.
how we do, like our parents might still be working, we're giving them money, You
Yeah.
can't, really write that off. But if you are caretaking for them and supporting them, and they're not working anymore, you could potentially do some things with that.
Okay. Yeah. Someone said
Yeah.
they have to be dependents. Daycare expenses phase out with higher income. Boo. Because who was it that, don't let me quote Biggie, but he said, more money, more problems, right? That's one thing. I really wanted to title this More Money, More Problems, but I was like, I'm
Right.
not. I'm going to keep it professional. I want to say, well, let me ask this. For those in
Hmm.
the chat, those on the live, how many of y'all own a business? When I say own a business, how many of y'all are doing something on the side where you are collecting payments for? Let's say it that way. So while we're waiting for those that are kind of answering if they own a business, are there any benefits to owning a business? If I want to sell, I don't know, peanuts, should I form an LLC, or should I just say, hey, I'm selling peanuts outside in my house. People can just call me. I'll give them peanuts. I get money. We're good. Like, what should they do to maximize the best out of doing their side hustle?
Yeah, I'm someone that I actually think differently than most CPAs, right? And most attorneys. I don't think you should do an LLC until you're making consistent revenue, me personally.
Hmm.
Um, because it's a lot of paperwork and things that you have to like keep up with, right? Like we work with so many people that they'll create an LLC, but they won't even realize that they got to do the franchise filings every year, right? So now when they're trying to go apply for something at the bank's like, I can't, your LLC is forfeited. And they're like, oh, I didn't even know
Hmm.
that I had to do anything, right? And if you're making consistent income and this is something that you're going to do long term, then yeah, it makes sense to do that, right? But there's too many people that are creating LLCs and they're making like $1,000 for the year. It doesn't really make sense. Just file like a regular business return and get the write-offs. So you don't have to have an LLC to take advantage of the deductions.
That was my question.
Yeah.
Okay.
Yeah, so you
Okay.
can literally, as long as you are in commerce and you're selling something, then you're going to have expenses for it. And so now
Okay.
the expenses can, take off all the revenue. So let's say you sell $1,000 in peanuts as your example, right? And it
Hmm.
costs you $500 for the peanuts. And then you have, you could throw in your cell phone,
Right.
your car expenses, all these things, right? The beautiful thing about a business is that there's a lot of things that we do in our personal life that you can now take advantage of and write off
Mm.
that you can't do if you are just a W-2 employee,
Okay.
right? So whenever you have a business, now you can shift car insurance, you can shift
Mm.
gas, car maintenance, everything car related, right? Because you're using your car to
You're
do
using
these
your
things.
car.
You can shift your cell phone
Hmm.
expenses, right? You can shift. There's so many different things, right? And once you really understand that, then now you can take advantage of having a business to lower your tax bill. But the only thing is you can't have losses for more than 3 years.
Oh.
So a lot of people say that, oh, I can have losses for 3 years, but the IRS looks at it like if in the span of 5 years, if you have more than 2 years of losses, then your business is not a business, it's a hobby. You are trying to screw us over, and so we're going to come in for an audit potentially,
But
right?
that's
So,
okay. We're gonna come back to that because oh, so much to unpack. Okay, I
yeah,
want to go back to franchise
yeah,
tax.
hmm,
I'm gonna give a personal story because I learned this the hard way. So my CPA is not in Texas, and that's a
okay,
story for a whole nother day. We'll talk about that another day. And so I was not really filing my franchise tax.
hmm,
Then I get a letter. And y'all, if y'all know me, y'all know I love what I do. I work hard at what I do. I dedicate my all to what I do, only to get a letter that says like, we about to shut you down. And
hmm,
I was like, what? So I'm obviously panicking and I'm looking it up. I don't know if I even messaged you. I think I messaged your wife. I think I messaged
yeah,
Rita. And I was like, what is going on? And she was like, oh, it's your franchise tax. So I went online, obviously filed it. It's free to file. I did.
hmm,
Now they charged me $50 because I was late. And I was like, that
yeah,
was $50 I could have put back in my business, right?
right,
But it charged me $50. And I was like, I downloaded everything. I was like, it's free. Obviously, I'm not making $1 billion.
hmm,
So, I'm good. But it scared me because I was like, is this fraud? Is this real? And my dad has been in business for, I think, over 20 years. And I called him and he was like, "Ah, you don't have a business." And I was like, what? And so ever since then, right? I think I put a fake date in my calendar where it's like, I think I put February the 3rd or something like that, where I'm like, let me do it early. Let me get it out the way. But if you're on this live and you're in Texas, please file your franchise tax or reach out to
Yeah.
Ephraim. Let them tell you how to do it. But I learned the hard way. And I love that people in here are saying they've been there. I'm not alone. Thank you, because I was scared. What
Yeah.
happens? What if I don't file it? What happens to my business, really?
Yeah, if you don't file it, then essentially someone can come and take your LLC name, right? So let's say your name is McDonald's,
Right.
right? And then you don't file your LLC or your corporation franchise returns, and now it's forfeited. So now it's like you don't have a business anymore. So now it's up for someone else to come create the LLC and take. Unless, you go and do like trademarking and stuff like that. You probably
Right.
have, but if most people don't do trademarking in the beginning because that's not cheap. It's you have to pay
Right.
an attorney or you have to do it yourself, right? So
Mhm.
there's so many business expenses in the beginning, which is why I always say, like unless it's something that's generating revenue, like kind of wait and then do the LLC and all that stuff later, because it's already enough that you're trying to figure out how to make money, but then now you have all these other filings and things that you have
True.
to be on top of. It's a lot. It's extra, I think. But yeah,
True.
so to answer your question, they will, someone can take your LLC name, and then obviously, if you are trying to go to the bank and say, hey, I want to get a line of credit or I want to get a
Right.
loan, the bank's gonna be like, no, not until you reinstate yourself because you're
Oof.
not a business. We're not gonna take like literally they will go on the computer as you're in right next to them and they'll look at that's the first thing that they're gonna do. They're gonna look up your LLC. If you're trying to open a bank account, they're gonna look up your LLC. And if it's forfeited, they can't do anything. You got to come back whenever everything's taken care of.
Wow. Wow.
Hmm.
I'm glad we have some business people in here. I love it. I
I
love
can't see
it.
the comments anymore. That's
Oh, you
annoying.
can. I don't know why people. I don't know how to do it. I don't take it off. Somebody else said that in another live too. It's like they can't see.
I think it's
They
an
can't see
Instagram
the
thing.
comments. I don't know what Instagram's doing. All right, we have a question. We're gonna be dipping because I want to get to questions that people have.
Hmm.
So I'm gonna ask my questions, but I'm also going to try to touch on other people's questions too.
Hmm.
Francis 2.0.0 said, how do you see lifestyle inflation affecting people's long-term wealth goals? Ooh, i.e., going outside, traveling, shopping. That's a deep one. Ooh, Francis.
Right, Francis wants to come with a serious question. I love it. No, it definitely impacts your long-term wealth,
Yeah.
um, which is why I was saying earlier, the whole business thing. I think it's important for people that have jobs to have some kind of investments on the side,
Mm,
and you don't necessarily have to start a business. You can invest in a business,
mm,
right? You can buy a business with somebody and you be passive in it, right?
right.
Someone approached me recently. There's like a franchise they're trying to open here in Houston, but they don't live in Houston. So they were
Mm.
like, can I partner with you? You own a percentage of the business. I do all the work, right? So something like that you can do, with your money and still be able to take advantage of write-offs and things.
Did you
But
say yes?
I did.
You did
But you're
not.
no. I said yes, but your sister is saying no. So I'm kind of trying to get her to be on it, right? So,
Right.
but no, but you like everything's going up. Inflation's
Yeah.
going up, right? Like expenses of food,
Yeah.
all these things, and you can either cut your expenses and stay in the house, or you can make more money and stay out and go outside the house, or have a
Mm.
combination of both, right? So in
Right.
a space like this, there is a lot of opportunity too. While people are getting nervous and they're scared and they're selling off their assets, if you have some money sitting aside, you can buy all those things, and take
Mm.
advantage of that, So definitely the way I look at it is, if I still want to be outside and I still want to do things, I need to sign some more clients. I need to get some more money in
True.
the door or whatever,
True.
right? This is
I
Francis
mean,
saying
that's,
that, huh?
go ahead. I was like, that's deep because I went to HEB today and I
Uh,
bought like 4 milks. I think I bought a tortilla, some things, and that was like $65. And I was
Easily.
like,
Yeah.
that is so that I don't think that's how it was before. So I'm also looking at, and salaries aren't going up, right?
Yeah.
Reimbursement from things that you're doing aren't going up. So it's like our cost of living is going up, but yet, we're not making more, or some of us aren't
Right.
making more. Some of us are making the same.
Yep.
So that's kind of getting a little bit confusing to those.
It is. It's a lot, and the weddings are still happening, right? Like if you have friends
Yes.
getting married, you still got to support them. That's money,
Yes. Yes. Yeah.
But and everything costs. If you want to travel and go somewhere, if you want to go out, if you want to take someone on a date, if you're single, right? These
Yeah.
dates are two
These
hundred
dates are
dollars now, from
dating.
what I'm hearing, right? $200, $300 to go outside, right? And so you gotta figure it out. You gotta balance it somehow.
Okay. All right. We have a business question.
Okay.
Oh, Fantasy, I know her. One said, "Hi, thanks for doing this. Can
Mm-hmm.
you please share more details on the tax write offs for a new business?" So I think before I'm going to let you answer, but I think before you answer,
Mm-hmm.
I would like for you to differentiate between an accountant and a CPA.
I like it. I like it. It's
Because,
funny that
and
you say
so,
that.
so
Go
you
ahead.
see why I say that, because I'm learning also this part, but I want you to kind of talk about accounting, accounting, tax, CPA, and then we can kind of put it together as to for a new business, how do you even set up yourself for bookkeeper too? How do you set up yourself for success at the beginning so that you're not playing
Hmm.
catch up? All right, over to you,
Yeah,
Ephraim.
it's such a great question because that was the training that I did over the weekend in Atlanta. So I don't. Did you know that?
No,
You had no idea, right? This is like
I
we're
promise you,
we're
I had no
here.
idea. None.
Well, yeah. So I went to Atlanta. I spoke at a conference, the Seven Figure Educator Conference, and the topic of conversation was building your financial money team,
Mm,
right? Like your financial dream team. And so a lot of people, whenever they go and they hire, let's say, a CPA or a bookkeeper, they in their head, because we don't educate, we as accountants don't take the time to educate people. They think that every accountant can do the same thing or everything, right? So you can do taxes, you can do bookkeeping, you can do payroll, you can do tax
mm,
planning, you can do budgeting, forecasting, you can do all these other things, right? And they don't realize that all these things are different skill sets. And a lot of accountants don't want to develop those different skill sets. They want to specialize in what it is that they specialize. And the example that I used over the weekend was if you have a child, you're not taking them to an ER doctor. You're taking them to a pediatrician.
yeah.
You see
Mm,
what I'm saying? If
yeah.
you have
Mm,
immigration issues with ICE, you're not going to a personal injury attorney.
no.
You're not going to a business attorney. You're going to an immigration attorney, right? And they're going to tell you, I don't do all this other stuff. Accountants, we want to take it all on or whatever and do it all, right? But some of us have built out our teams to where they can handle all the different requests. So to answer your question in more detail, you have a tax preparer. A tax preparer is someone that simply makes sure that your tax return gets filed to the IRS on
Okay.
time, right? It has nothing to do with how much money you owe. They are
Mm,
specifically preparing your tax return. Then you have a tax strategist. That is somebody that can put it together a tax plan for you to say, okay, you don't want to owe all this money. Here are the things that you need to do during the year to make sure that your tax bill will be as low as possible.
mm,
Those two people are not the same. Those are two
mm.
different people because they teach you in college how to prepare a tax return, but they don't teach you how to save. Like, can you imagine
Strategize.
the college saying, hey, we're going to teach everybody how to
How to
help people
save
not pay
money.
taxes?
Right.
How would the
Mm,
government make money? You see what I'm saying?
right.
So you
Right.
have to learn these things on your own as
Right.
you like are working in your field.
Mm,
Then you have a bookkeeper. A bookkeeper specifically prepares financial statements. So they record transactions from your bank statements and your credit card statements, and they make sure that you have financial statements such as your income statement, which tells you how much money you made, how much money you spent,
mm,
and what your profit is, and then your balance sheet, which tells you how much assets, how much your business is worth.
right.
What's the assets on file? What's your liabilities, and what's the equity stake that you have in your business? Then obviously the statement of cash flows, which is another statement,
Right.
right? And so then an accountant is the one who is able to analyze those statements. So a
Okay.
bookkeeper and accountant aren't the same, but they a lot of times can be if they understand how to analyze financials, right? But that's a different skill set. Then you have So I talked about tax preparer, tax strategist, bookkeeper, accountant. Then you have CFO. A
Mm.
CFO is somebody that is forward thinking, right?
Planning.
You come to a CFO and you say, CFO, I in 2026 want to make $5 million in my business.
Mm.
The CFO is able to now build out a plan based upon what your financials are saying and say, okay, based upon what I'm seeing, you would have to sell X amount of product per day or per week or per month. You would
Mm.
have to hire X amount of people, right? You would have to do all these things in order to reach those goals, right? An accountant analyzes the financials of what happened in the past. So accountant focuses
Okay.
on the past
On the past.
because your financials are
Right.
between, you see what I'm saying? And
Previously,
then
yeah.
the CFO focuses on the future.
Future
You see what I'm saying? Yeah.
and
And then
growth.
you have,
Yeah.
obviously, you have people that do payroll, accounts payable, accounts receivable. So the CPA is a certified public accountant, right?
Yeah.
So CPAs have multiple things that they can focus on. A lot of CPAs focus on tax,
Okay.
right? Like tax preparation, because there's a difference between doing an H&R Block simple tax return versus doing the business tax returns for corporations and people that have cryptocurrency, real estate, stocks, all these different investments, right? But then you also have CPAs that focus on the audits, right? So like they're
Mm-hmm.
auditing
Yes.
public
Mm-hmm.
account like companies, right? So me and Rita, when we were in corporate America, we were auditors. So we would work on big Fortune 500 companies, like let's say Exxon, Shell, companies like that, and we would audit their financial statements.
Wow.
And
You got to see the
yeah,
big bucks.
I did, which is why I'm not scared of seeing them now, right? Like
Yeah.
because I saw them when I was younger. It's just it's all numbers to me in my head, right? And so CPAs, like I said, they specialize in tax or they specialize in audit and insurance.
Okay.
So then, yeah, so CPAs are able to help you prepare your tax returns, but a lot of CPAs don't know how to tax plan. And
Okay.
that's where the issue lies, where, people go to their tax person after the year is already over. After the year is over, you can't do anything about the year, right? You can't go back
Right.
and plan. So you go to your person in February or March, then they file your return, they prepare your tax return. They say you're going to owe 55,000, and you're angry. You're like, is there anything else you can do? And it's like,
God
no, I
forbid.
can't do anything else, because
Right.
the year is over. Whereas if you work with somebody throughout the year, now by the
They can help you
time March comes,
strategize.
you can strategize. And now once December 31st ends and everyone says Happy New Year and you can't do anything, you already have a plan that's already been put in place and you don't owe any taxes.
That's good. Thank you for that. I think that is so important. And,
Mm,
we're going to get back to that and why I think it's important. But I want to now use that as a segue to answer the question of, because if you're a new business, I'm sure you don't have that 5 departments. I call them like
no.
not even department. There are 5 different entities right there,
Mm-hmm.
right? So a new business doesn't have that. So, but someone is starting off, they keep hearing from everyone, oh, you own a business, you can write off. You own a business, you can do this. What are some general write-offs for someone like they started this year? We're in the last quarter.
Mm-hmm.
They're trying to make sure they don't owe next year. What are some tips that you could give them that they could potentially write off that they don't even know they could write off?
Yeah. So the way I like to keep it simple, I like to tell people that tax write-offs are anything that you spend money on that you are trying to help grow the business, right? Or move the
Mm,
business forward, right? So if I go buy jewelry, is that helping me move my business forward?
mm,
Most likely not, right? In most cases,
right,
unless I sell jewelry, right?
right.
Um, if I'm buying some scissors or paper or something like that, right? Is that helping me with my business? For me, yes, because if I print out tax returns or whatever, or let's say
Gotcha.
I'm printing out documents so I can scribble on them in person, then that's helping me, right? So that's
Mm,
the easiest way to look at it,
mm,
So whenever I spend money, if I'm spending money on gas or if I'm spending money on my car to repair my car, let's say I have clients in different states and cities in the US. Let's say I'm driving to Atlanta to see a client. That's a
right.
write-off. If I'm flying to Atlanta to see a client, that's a write-off, right? So you can write off literally anything that's helping you to grow your business, So for me, what I tell people is when you first start, you want to have, a simple business bank account. an account where all your business transactions are happening. So all the money that you're making is coming into it, and all the
Mm.
money that you're spending is going out of it, right? So in the beginning, you probably won't be making money, so you want to put your own money into the
Inside.
business, right? 10,000, 20,000, whatever it is. You want to sit down with a spreadsheet and fill out the spreadsheet and say, okay, I'm starting, I don't know, a hamburger business. How many hamburgers am I going to forecast that I'm going to sell? I need to buy the patties, the lettuce, the ketchup, all these things. I need to write all these, put all these things in a Excel spreadsheet and budget it and figure out, okay, this is how much money I need to start this thing. And then once I figure out that total, I put that money into the bank account and now I start to spend,
Mm.
right? And so
Okay.
now as I'm spending, now, when the money's coming in and hopefully I'm able over some time to make more money than I'm spending, then now
Right.
at some point I can take that $20,000 out and put it back in my business, in my bank account, or I can just not take it out because it is my business
It is your business. You're
and
sewing into your business.
I'm just sewing into my business and I'm looking at my business as an asset, right?
Mm.
It's sort of like if you buy a house and you're renting it out, it's an asset that's making you
Yeah.
money,
Yeah.
so business is the same thing. Um, So if you do it like that, then now you're able to, at the end of the year, let's say you only made, I don't know, $16,000 in your business, which is not bad. You
Mm-mm.
can put that on a spreadsheet. I made 16,000, then I can go through each month and I can see how much money I spent on my business. And let's say it's
Mm.
30,000 I spent. Now I have $14,000 of a loss
Right.
that can offset my income, you know. So now if I made $100,000, now I'm paying taxes on 86,000
Ugh.
because of the 14,000
Right.
loss.
That's
Yeah.
a good way to look at it. You said anything that would help propel your business. I didn't, it took me a while to get that because
Mhm.
things like car repairs, and I shuffle between two clinics. I would just say, oh, and funny enough, I only use a certain car during the week, but I would not think about, but I'm shuffling between two clinics. Like, I need to
Yeah.
buy gas, I need to change tires, I need to do anything. So, I hope, Tosin, I hope you got that. Anything that is for your business, definitely use. We have more questions, so I
Hmm.
want to get to them.
Bring them
Um,
on.
I am made underscore A said, are there any risk when a legally married couple who live together choose to file their taxes separately? Also, since we file separately, how can we both claim ownership of the house on our tax return? Oof.
It depends when you say, because files separately mean different things for people, because there's different
Mm,
filing statuses. You have single, you have head of household, you have married filing jointly, you have married filing separately, and then you have like a widowed filer, someone,
right.
that has a partner that passed away. So whenever I hear someone says that they want to file separate, I'm not for sure if it's married
Mm,
filing separate or if it's one person files single and then one person files head of household. Because some people do that.
okay.
Because when I started off doing taxes, I was in the hood, you know what I'm saying? So, you know, I have some experience in that space, right, early on
Wow.
where, I saw all kinds of things,
Yeah.
So, depending upon that. So let's say
So what's the
it is
best? Should we file married but separate? Which one will give me more money back?
that's a challenging thing, and it's one of those things where you have to kind of play with it as the accountant. So you have to
Okay.
do the preparation both ways to see which
Okay.
one is more advantageous. When you file married filing separate, there are different things that they take away, right? Like they
Mm.
take away certain child credits. They take away a lot
Mm.
because the United States of America promotes marriage. They want
Of
people to be
course.
married. They want people to file married. And so in
Mm.
their eyes, it's like, okay, if you are filing separate, then that means that you're still married, but you're separated,
Right.
right? And so because you're separated, that means you're probably headed towards divorce. And so we're going to strip away certain benefits that you would get if you filed married filing separate. I mean, filing joint. The issue though is that if both parties are making too much money, like I'm sure her situation, um, whenever you file together, you potentially might be in a much higher tax bracket, which the highest bracket we have now is I think 37 to 39%. Right.
Wow.
So we have clients that are in that bracket, right? Because both parties might be making combined five, six, seven
Very
hundred
serious.
thousand,
Yeah.
right?
Yeah.
More money, more problems, you know?
Child.
So, As a
Okay.
W-2 employee, you're like, you're like, man, I might need to be Republican after a while. That's when people start scratching their heads, like, hey, man,
You
I don't
start
know.
thinking twice.
It's a
Right.
lot of money. But yeah,
Okay. Oh, we got questions, Ephraim. We got questions. All right. Edit 78. I'm going to do a plug right here. If you visit anything I have done and you've eaten the cake of any event I have done, Edit 78. If you
I
want cake, I
love it.
only Edit 78 for all your cake needs. You can't go wrong. And y'all know I like food. Okay.
I'm pretty
Here's,
sure I've had their cake before.
I know you've had, you were at my wedding. You've been at all my events.
Yes.
You've had Edit.
Okay.
There's no
I
one.
did.
All right,
I
Edit
love it.
78 says, can you please share any tips or advice on retirement accounts? This is a huge one.
Hmm.
I like this question. I'll let you answer, then I'll have my follow-up question.
When we say retirement accounts, meaning like as an entrepreneur or as an employee?
That's what I was going to ask. I'm
Yeah.
thinking entrepreneur. Let's go entrepreneur route.
Yeah. I mean, we implement it in our business.
Okay.
That's a deduction. That's a tax deduction that you can write off, right? So you can create a 401k for your company and you can put money into it. And then also, obviously, you get to write that off. Traditional 401k, I think, is still 69, 70,000 that you can put into it. But then also, you have employees, right? Like whenever you create 401ks, depending upon which one, let's say it's a traditional 401k, now the rest of the employees in your business have to take part in it. Well, not have to, but they have to be able to be given the option to take advantage of
Okay.
it. But not everybody, let's say you have a cleaning company or like Burger King or
Mhm.
something like that. You're probably paying your people, $15 an hour. They're probably not gonna, obviously, they're not gonna take advantage of it
Right.
because they got bills to pay, right? But if
Right.
you're paying bigger salaries, then they more than likely will say, you know what, I want to participate in 401k. Honestly, in this day and age, they probably won't because of the inflation that Francis
The
was talking about.
inflation, right.
You
Everybody
know,
feel like they want their money right now. Tosin, I
right?
hope you're still on. I hope you heard that. That's another write-off 401k. But I like
But
that. Edit, if you want more, have more follow-up, please put it in the chat.
But yeah, you can definitely use that as a tax deduction. As an employee, you can definitely use that to your advantage as well. You can contribute to it up to I think 23,000, you know?
Wow.
And so now if you make 100,000 in your job and you contribute 23,000,
Hmm.
now your taxable income, your taxes that the money that you're paying taxes on, which is called your taxable income, is now 77,000 instead of 100,000.
Oh.
So the whole name of the game is to figure out, and I did a training on this, y'all. Y'all should join my school community and
Oh,
watch
you know
that
I was
training.
going to plug that.
Oh, I
Mhm.
appreciate, yes, I did a training on this last week
Yes.
and I pulled out a spreadsheet and everything, right? And I went deep because the whole name of the game is you got to look at the tax brackets, right?
Mm.
You have a 10% bracket, 12%, then it jumps up to 22%, 24%, 28, 32, 37. So you have to figure out what bracket am I in and how
Mhm.
can I go down. So if I'm a 37% bracket, how can I go down to 35 or 32%? Right.
Wow.
And so what are the ways? So, and then you have, when we say bracket, meaning at, let's say like you're in a 24% bracket, that is income of, let's say 100,000 to 200,000. Right. And let's say the 12% bracket is from 50,000 to 100. How can I drop my income so that I can be between that 0 and 50? Because I'll pay less taxes. So one way is to do the retirement as an
Right.
employee
Put
because now
more.
it brings your, yeah, so now it brings
Makes
your income down.
sense.
Yeah, so now that's the
Makes
name
sense.
of the game.
Wow, y'all. His school community, it be popping up in my emails. But honestly, at night, I kind of go through them and I'm just
Yeah,
like, like, and people are conversing, people are talking, people are sharing their experiences. So he's gonna drop it in the chat. Definitely go to his page and join the school community. You would not regret it. Okay. I'm gonna call it panic. There's a lot of periods. Panic underscore Malik said, is there a rule of thumb as far as amounts that you utilize to determine whether or not to itemize? That
is there a
sounds really
rule of
complicated for
thumb?
me.
Is there a
Is
rule
there a
of
rule
thumb
of
to
thumb?
determine the amounts? Say it again.
Yeah, as far as amount that you utilize to determine whether or not to itemize.
Yeah, for sure. Let me go to Google right now because
Oh,
I
yo,
know a lot of this stuff, but there's things that I may not know often because things change
right.
very often, right?
Right.
So that's the thing about our industry, and that's why a lot of CPAs are dropping out because they're like, this is too much. Like you
Oh, I
guys are
got it.
always changing something.
I'm scrolling up and down. Okay. While you're looking
So
that up, Prince Cato. Okay, I was gonna talk about this, Prince Cato. He said tax pros on IG will tell you to create an LLC, buy a G Wagon, and write it off. Yes or no? Because I promise you I'll go get a G Wagon this weekend. Is that real?
so we've done it for clients, but the clients that we've done it for, hold on, let me. So the clients that we've done it for are have businesses that are making a lot of money, right?
Okay.
So
That can
it's not a
afford a G
situation.
Wagon.
Right. Because another thing, whenever you are writing things off on your taxes, it has to be reasonable and it has to make sense,
Mm,
right? So if I have $200,000 business, but I'm going to go buy a G Wagon, the IRS is easy going to be like, okay, what are you doing here? Like you only made 200,000, but you spent 140,000 on this.
right.
But let's say I
Right.
made 8 million and I spent 140,000.
Yeah.
You see what I'm saying? Like
Yeah.
it's not that big of a deal. The IRS will let that go. But so there's certain vehicles that you can write off the whole amount as
Wow. Does
long
it
as
have to
it
be a
weighs.
certain weight or
I'm about to say
something?
that as long as it weighs 6,000 pounds or more,
Okay.
right? And so there, I go more in depth in my school community as well on that.
Yes.
But you can, and there's a website too that has the different vehicles that qualify, right?
Okay.
And so that's why a lot of people, if you realize Elon Musk was smart, whenever he created the Cybertruck, he made sure that it weighed more than 6,000 pounds, so that people
Um,
can
use
buy
it as
it
a write
and
off.
use it as a write off, right? We did that. Our Lexus that we purchased a while back, we didn't just buy it because we wanted to get a write off, but like there was an accident that happened, and so we were
Mm-hmm.
without a car, so we went and bought it, and it just so happened that the accident happened December 20th,
Hmm.
right? So we were able to buy the car before the end of the year and write off the whole amount,
On that
even
for
though
that
even
year.
though and you can do that even without buying it cash. You can finance it and still write
Okay.
off the whole amount. You see what I'm saying?
Wow.
Some of this stuff is too deep. Like we're gonna have to do more of these or do some
I
kind of like
know.
training. I
I
might need
feel
to
like
pull out a whiteboard. You know what I'm
I
saying?
know we're
Like
gonna have to put a whole spreadsheet together
we
because
might have to
I
do
honestly
something.
feel like knowledge is power, and
Hmm.
other so many people are aware and yet so many people are unaware.
Hmm.
So, and I'm just honestly, I'm just scraping the bottom, y'all. Like just because of my little, I'm just nosy. And because I'm nosy, so I'm like, I started the health hub because I'm like, I want to know about this and I want to know about that. And people are out here living lives. What am I doing wrong? So
Living like
that's what I'm trying to do here. Okay, we got to
wait.
get to some more
Let me go
questions.
back to the other person.
Yes.
So I found it online. It says that the standard deduction for people that are single is 15,750. Married filing separate is same thing, 15,750. Head of household, let's say you are you're in your house and you have a dependent, like a 6 year
Hmm.
old, and is single mom, single father, and it's just you and that child. That means that you're head of household, right? So
Hmm.
that's 23,625. Married filing jointly, the standard deduction is 31,500, right? So his
Okay.
question, when does it make sense? It makes sense if the write-offs that you have as an employee
Hmm.
is more than that 31,000 or that 15,000. So when we say
Okay.
write-offs, meaning the charitable contributions, the interest for your house that you purchased, or the property tax. Um, so before this year, before Trump came into office for the second time, he messed us up like when he was in office for the first time because he limited the amount of money that you could write off if you have state tax or sales
Oh,
tax,
because we have,
right?
yeah.
So and he did that to kind of screw people over in New York and California, right? But if you bought a house back then, you already know as a house owner, like your interest and well, your taxes a lot of times are pretty high. But back then you could only write off $10,000 and you
Mm.
were capped of like property tax, right? Now he lifted it to 40,000, right? So now he made it better. So if you
Yeah.
have mortgage interest, property tax, charitable contributions, and then obviously the medical stuff that I was talking about, if all those
Right.
things
Right. Right.
are higher than the 15,000 if you're single or 31,000 if you're married,
Mhm.
then it makes sense to itemize.
To itemize it.
Yeah.
Okay. Ooh. All right. Let me go. I'll come back, you guys. I'm trying to get through a lot of these questions. I am. Let me see. Okay. Does your starting capital count as a write-off in the example that one of the examples we talked about? So your starting capital count as a write-off.
No, it's not a
Oh.
write-off until it's spent.
It's not
Does
a
that make
write-off
sense?
until until it's an expense.
Does that make sense? So in the example that we use, if you do your spreadsheet and you figure out that everything that you need to buy for your business that you budget is $20,000, what
Mm-hmm.
the person is saying is, okay, if I put $20,000 into my business and it just
Mm-hmm.
sits there, is it a write-off? It's not a write-off. But once you start
Mm.
spending the 20,000 on all the different things, that's when those are write-offs.
Okay. Question. Very good question. So I'll go
Yeah.
back to another question where someone said, what is the difference between a write-off and a standard deduction?
Standard
Is there a
deduction.
difference?
Yeah. Standard deduction is what we just talked about. How,
Okay.
if you're single, standard
Okay.
deduction is 15,750, and married is 31,500. And a write-off would be, well, depends what they consider, what a write-off is, right? For me, when I hear the word write-off, I hear I own a business and I have different business expenses, so now I can write those off, right?
Okay.
So that would be that.
Okay.
Hmm.
Ooh, y'all, people are joining this. Thank you,
Yeah.
Lord. Thank y'all for joining. Chichi underscore Anela said, can someone that does not have a business open a 401k for retirement?
Yeah, for sure. But I see what she's saying.
Yeah.
I see what she's saying.
Ooh,
No. Well, yes. You can do like a Roth IRA or
okay.
like a traditional IRA, but you are capped. You can only contribute 6,000 to it,
Something's
right?
better
But
than that.
yeah, something's better than nothing. They do have something called a backdoor IRA, Roth
Okay.
IRA, where there's things that you can, it's complicated, but there's things that you can do to where you can like backdoor your way into putting a lot of money into your IRA. But that's a great question. You can't, if you're an employee, you can't create a 401k because a 401k is more so for like a business to create. So like now if your
Um,
company creates it, now you can participate in it.
you can.
Yeah,
So if, for example, for the business owners here, if they own a business and they create a 401k, they can be an employee into that 401k.
exactly. So
Okay.
you have to already be paying yourself as an employee
Okay.
of your company, and then now you can, do all that. And then so there's also other 401ks. There's solo 401ks,
Roth,
right? Uh,
traditional. Someone
yeah,
asked about that. What's the
simple IRA.
difference?
Yeah, yeah. Y'all are getting really deep.
I know. Someone
I
said
love it.
Roth versus traditional 401k. What are your thoughts? This is crazy. I love it. I love
But
it.
you see how. So a lot of these questions, right? So you have taxes for personal, for
Yeah.
individuals, and you have taxes for businesses, right? And those are two different specialties that you have to kind of study and know. And some
Mhm.
people only know the individual, the personal side, and then some people might only know the business side. So this is what I'm saying. Like you have to kind of really like it's a lot of just experience, right? Like when people come to you, and sometimes you might learn on the job at people's expense early on, but you get a hang of it. So the difference between traditional and Roth, which one's better? I think traditional is the one where you pay taxes now on the contribution, and then Roth is you don't pay taxes until you pull it out in the
Yeah.
end, like years later, or it might be reversed. I don't remember really,
Yeah, it's one of
but
those. I got to go back and look
yeah.
at it too.
Hmm.
Either one. Okay, I'm gonna skip Francis' question. He said, "What's the biggest health misconception you see among people who work 9 to 5 jobs?" I'm not gonna skip it. I'm gonna answer it.
Yeah,
What's he
answer
asked me, but
that's
I'm
for
gonna have
you.
you
That's for you.
answer
Are you
it.
gonna have me answer? What's the biggest
I'm-
health misconception?
What's the biggest health misconception you see among people who work 9 to 5 jobs?
I can answer that. I know for me, and we have Chichi on here who's like a workout warrior. But I used to think that if I wasn't like, how they say if you run all the time that your knees
Mhm.
will like deteriorate and all that stuff.
Right.
And if you're like active, you'll deteriorate, right? So I'm like, okay,
Right.
I'm good. I'm sitting down all day. I'm not putting any wear and tear on my body. And that
Woo!
was the worst thing,
Yeah.
right? And then I realized that was actually the worst thing that I could have done to myself, right? And it
Yeah.
actually ages you earlier because you're sitting down all day. And I think the pandemic and when we had kids and all that, it just made me really lazy at the time. So I had to
Mhm.
reverse all that and get moving and get active, you know? So sitting around is not, it's the worst thing. I think they say it's worse than smoking,
It is.
you know?
Motion is lotion, guys. That's all I'm gonna say. I'm a
I like it.
PT. Motion is lotion. I'm gonna be
There it
moving.
is.
I'm actually signing up for a gym tomorrow because I need motivation for myself to work out. I motivate people
Hmm.
all day. I encourage people all day. I see the best, and then I'm drained by the time I get home. So I'm actually joining a gym. Wish me luck, and I'm going to
Nice.
do group classes so that I too can get someone to motivate me. So, but yeah, that was a great answer you gave. Everyone is talking
Thank
about
you.
edX cake also. This is great. All right. They had asked about the standards you wrote, but Prince Cato founded singles 15,750,
Yep.
married, all of that is all written in there. Um, what about, oh, this is a good question, contractors. So what if you own a business? You
Hmm.
own a business. Which one is better? Should you pay yourself as a contractor or should you pay yourself as a W-2?
Great question. I always go the W-2 route, you know,
Oh,
because if you pay yourself as a contractor, it's the same thing as like a Schedule C. Is everyone familiar with the Schedule C and what that is? So Schedule C is the business tax return that you file on your personal return when you are like a single member LLC. So if you create an LLC and you're the only owner, then you would file a Schedule C tax return, right? And so when you file a Schedule C tax return, you put on there pretty much everything that's on your income statement. Here's how much I made, here's how much I spent, here's my profit, right? So you would literally do the same thing if you were a contractor. So let's say you made $100,000 and you paid yourself 30,000 as a contractor.
mm-hmm.
You get to write that off, but then you still have to do a Schedule C on your personal return that you now have to write off the 30,000. You have to figure out how to make that 30. You see what I'm
Oh,
saying? Because
how
there's
to
no
pull
taxes that were
it
taken
into
out.
your personal.
Yeah, so the 30,
Huh.
France is crazy. So the 30,000 that you pay
You're
yourself as
looking
a
for a
contractor.
whiteboard, aren't you?
No, but I think like everyone that's listening is pretty, they're pretty up to speed with all because the questions they're asking is very,
Right. It's
you can
deep.
tell that they have experience. So everything I'm saying, they're probably gonna be able to catch. So the
Yes.
30,000, you write it off, but you still, if you don't find write-offs for that 30,000, then now you pay taxes on that 30,000.
Oh.
Think about it like this, right? You have your business tax return. Let's say you're a corporation. You
Mm-hmm.
made $100,000.
Mm-hmm.
One of your expenses, let's say your only expense was you, which was
Mm-hmm.
$30,000 for a contractor,
Mm-hmm.
right? So now you only pay taxes on that 70,000,
Mm-hmm.
but then you have to now do a tax return for that 30,000
Because on your personal.
on your personal because you didn't pay any taxes.
Oh.
But you
But
don't have any deductions because you
you don't
already
have any
you
deductions.
you see what I'm
Okay,
saying?
now it made sense. Okay.
Whereas if you're an employee of your company, you already paid all your, hopefully you withheld enough, you paid your taxes, and you're good. You know,
Y'all, payroll tax is not fun. I can tell you
it's
that.
not fun. It's not, and there's no way around it.
That was my follow-up
It's
question.
yeah, there's no way around it, and it's the cost of doing business, right? Like when
Yeah.
you're hiring people, and you are, and here's the thing, you want to hire great people to the point where you're like, I want to pay you a lot of money
Mm,
because I know if I pay you a lot of money, you're gonna help my business grow. You're gonna make my life easier,
right.
right? I can go MC more weddings because I have great people
Look,
handling my business for me,
right.
right? Whereas if you pay people that aren't good, you're still stressed. You're still in the
Yeah.
business going crazy,
Yeah.
right? So, whenever I look at my employees, I'm like, man, I'm happy that they're here because
Mm,
they're allowing me to do things like this where I can just focus on
yeah.
marketing and I get clients and then now they handle them, you know?
And I think you taught me that. You taught me that. Was that last year? I sent you a DM and I said, I don't know if you remember, scroll up because now we send other stuff. But I sent you a DM and I said, when should I start hiring help?
Hmm.
And you said, immediately.
I
And
did.
so
Yeah.
I went on Indeed. I hate Indeed. I'm trying to find a way to get people. Anyway, that's a conversation for another day. I went online, got someone, and I said, okay, you know what? I am going to dedicate this Houston clinic, this caseload. You're going to take this caseload. And that allowed me to be so much effective,
Hmm.
right? Because like I see patients all day and I'm doing billing at night, and it's just like wearing so many hats. I can't wear all the hats because I felt like things were static. But when I kind of let go of some things, I was kind of seeing a little bit of movement. I was
Hmm.
actually getting more business
Yep.
than I thought. And I was like,
Yep.
oh my gosh, Ephraim is not
Hmm.
crazy.
See, people look at me as like just a CPA, but I've been doing this now, what, for 16 years, like business, right? And
Yeah.
not only have I been only doing my own business, but I work with so many businesses,
Yes.
and I get coaching, right? So, I look at myself. I don't really look at myself as just a CPA. I look at
Yeah.
myself as a business person, and because CPAs kind of pigeonhole themselves as just tax and
Mm,
accounting and stuff,
right.
and that's how all of them never really grow, right?
Mhm.
And so, you know, I'm just happy that you listen because a lot of people don't really listen. Like they
Yeah.
just think I just talk or whatever.
No,
But
I listen.
and
I
it's
want to be
good.
successful. I want
Yeah,
green. I want I want to live life
you want
legally.
green. But to be honest, my mindset changed in 2018 when Rita called me and said, "Hey, we're having twins." That's where
Hmm.
everything shifted for me.
Right.
Because I was like, if I continue operating the way I am, then I'm going to be an absent father, and she's going to be taking care of the kids all by herself, and I didn't
Right.
want that. So I had to like
Wow.
tighten up.
Whew.
Yeah.
Y'all, okay, we have one more. I think I'm gonna take one more question. I'm gonna have to do a big scroll. All right, I'm gonna take one more question. Oh, from Toasty, you stayed on. Yes. She said to follow up on that with the 401k, does that mean it's only you file as an S-Corp or is LLC allowed? Like
It
if she
has to
owns an
be,
LLC, can she
yeah,
still file? Okay.
no. It has to
Oh,
be either S Corp or C Corporation because in order for you to do a 401k, you have to pay yourself
mhm.
as an employee of the company.
Okay.
And if you are a single member LLC, you cannot pay yourself a payroll because it's like, it's not, not that it's not frowned on, but it's illegal to pay yourself as an employee as a single member LLC. You have to convert that LLC into an S corporation or
Or
a C corporation. So now, as an S
okay.
corporation, you have to pay yourself a salary mandatorily. Like there's
Mm.
no way around that. You have to pay yourself a salary, and then you have to pay yourself a reasonable salary. That I see some of you people are making 2 million and you're paying yourself 20,000. The IRS is gonna come get you, right? So,
Really?
oh yeah,
But what if I want to put oh no, let's talk about this. Cause hold up. Let's talk about this because what if I want to grow my company
hmm
and I'm not gonna be paying myself $500,000 and yet I can't meet payroll. I'm gonna reduce how much I'm making so that I can meet payroll.
yeah.
Can
So
I do
yes,
that?
you can, but the IRS, yeah, I mean, somewhat, right? The IRS wants you to pay yourself a reasonable salary. So if your title is CEO,
Oh, you're right. You
if your
have
title
to
is
pay yourself the
CEO
equivalent of a CEO, like
in
the
your
lower part of
industry,
the bracket.
in your industry, so that means if you want to pay yourself the 20,000, you need to change your title to receptionist and have someone be CEO of your company. You see what I'm saying? So, yeah.
I'm done talking to you, Ephraim. I'm done talking to you. You're right. Because conversation for another day. Okay, I'm gonna do one scroll through. You guys, this has been like, oh my gosh. I'm gonna have to go back and watch this. And we're gonna need part two, part three, because
Let's do it.
I mean, we barely touched, but at the same time, I feel like each one we can dig much more and
Hmm.
get more information and maximize benefits. Okay, any last questions? Well, let me say this. What are some last tips you can give? You've given us a lot of tips.
Hmm.
What are some last tips that you think people don't know or people need to look into? What just any last advice that you have for us? Business and
Yeah,
non-business.
I have a lot, but I think I'll keep it short because they say my nickname is Yanes, right? Right.
Giannis.
So,
I try not to use it.
I'm real passionate about people doing business the right
Yeah.
way, right? Like trying to
Yeah.
scale. Like I want everybody to like grow their business,
Mm.
because A lot of times, people what we'll do is we'll start a business so that we can replace the income that we're making at our job, right?
Mm,
So let's say you're making 140,000 at your job. Once you hit that 140, 150 mark in your business, you're like, I'm stopping.
yeah.
But what ends up happening is the economy or something happens, and now that 150 gets slashed to 70,
Mm,
60, 50, and now you're out of business, right? So you have to continue growing your business. You have to continue getting better, um, receiving coaching, learning, right?
right.
You need to know everything in your business. You need to know how to market,
Yes.
how to legal, accounting, like
Yes.
finance, all these things, right? I look at it like I'm LeBron, and like they say LeBron knows all the plays of the teams that he's playing against. He knows all the plays of his teammates. He knows where everybody should be. He's the quarterback,
Yeah.
right? You have to be that in your business,
Yeah.
right? And then you have to go out there, and instead of also looking at it from a standpoint of, instead of me trying to do it all by myself, let me go hire. Let me go find great people. The way I look at my business, even with the people that I hire, everyone has a story. Everyone
Yeah.
that works for me was at a job that they hated,
Mm-hmm.
and then now they're here and they feel like it's home,
Home.
right? So imagine if you had a business where you attracted amazing talent to come work for you, and that amazing talent was somewhere out there and they hated their job, but if they knew that your business, Rock Rehabilitation, was out there,
Yeah.
they would come to your business and shine. You would let them shine and flourish.
Absolutely.
What could
Absolutely.
that do? Now you can serve way more people, and you
Yeah.
can obviously, the more people you serve and impact, the more money you make in your business, right? So, I just want to
Absolutely.
shift people's mindset around that.
Thank you for this. Thank you so like I can't even thank you enough. Thank you for saying yes from the minute
What?
that I
What do you mean? Thank you for saying yes. I was saying yes before you even asked.
I know. And honestly, I just think you're a wealth of knowledge. I think you're brilliant. Like everywhere I go, everything I'm always talking about eight-figure focus because I want to get to eight figures myself. But you touched on one thing that I want everyone here or everyone that's listening that will rewatch this on YouTube to know that learn your business. If you own a business that is a food service, be the receptionist, be the checkout person, do the waiter, waitress, do all of it. I am just now
Hmm.
learning how to do my QuickBooks because I left accounting to the end and I shouldn't have, because that's
Yeah.
what propels my business. So I mean, this has been amazing. We're gonna do another one because
Yeah.
these questions were deep. They were deep, Ephraim. So that tells me that a lot of people have a lot more to ask and they're
For
not
sure.
as knowledgeable in the fine details. So I want to thank all of you for coming. I think we hit about 21, 22 tonight. That was
That's
amazing.
amazing. That's
This is going
amazing.
to be on YouTube. I'm going to upload it to YouTube. I'm going to share it. Please go back and watch it and just learn because I know we were saying a lot, but Ephraim dropped a lot of gems. So I appreciate you guys. Have a wonderful evening. Have a blessed week. Thank you, Ephraim.
Yes. Thank you for having me. I
You're
appreciate
the
you.
best. All right. Have a good weekend,
Yes.
everyone.
All right.
Bye.
Bye.